We are Group 6 for Corporate Finance, and our group is made up of Connor, Div, Lani, Louisa, and Matthew, and we are doing a financial analysis presentation on Kiwi Property Group Limited.
So our chosen underperforming financial ratio group is profitability for KPG. Starting off with gross profit margin, KPG ranks third amongst its peers and is under average with a peer average of 0.754 and KPG recording 0.748. This indicates that KPG is less efficient at producing a profit from sales and indicates a suboptimal cost of goods structure. Moving on to a second ratio, profit margin, where KPG ranks dead last and obviously is under average against its peers. The peer average is 1.52 and KPG has recorded 0.84. This tells us, like gross profit margin, KPG is less efficient at producing a net profit from sales and indicates an inefficient capital and cost structure. In our third ratio, return on assets, KPG also ranks third against its peers and is once again under average, with a peer average of 0.094 and KPG recording 0.06. This tells us that KPG is less efficient at generating a return using its assets than its peers, indicating an inefficient use or quality of assets and asset structure. And our final ratio is return on equity, where KPG once again ranks third and comes in under average with a peer average of 0.16 and KPG recording 0.096 in FY21. This tells us that KPG is less efficient at producing profits per unit of equity.
As we can see, profitability is the most underperforming ratio group for KPG. So what is causing this poor performance? As of recent times, COVID-19 has impacted many businesses. However, KPG has suffered greatly in comparison to its competitors in profitability. This is due to the firm holding majority of their assets within the non-essential retail sector. As lockdowns ensued, non-essential retail was not able to generate profits compared to pre-lockdown levels. To help aid these businesses, KPG provided rent relief and holiday schemes, which consequently increased cost and decreased profitability for themselves. In accordance with COVID-19, KPG's asset valuation fell off immensely as the pandemic was announced. This caused highly skewed estimates of their net fair value loss on assets, which caused a deflated net income for the fiscal year 2020. Currently, KPG is investing large amounts of capital to alter their strategy and help restructure their property investment portfolio. As this is a transitional phase, the firm is yet to see any significant returns on these investments.
As a result of Kiwi Property Group's poor performance and profitability, we have made the following recommendations. Firstly, we recommend that they diversify their asset portfolio away from non-essential retail properties into more essential retail properties such as offices. This will create a more resilient property portfolio, especially in times of COVID-19. Through our analysis, Kiwi Property Group have indicated low quality assets, so we recommend that they optimise their asset quality by moving away from commercial real estate in their property portfolio to more profitable asset sectors such as industrial and workspaces.
Moving on to a third recommendation, which is the implementation of stricter rent relief. In full year 21, KPG gave out umbrella rent relief to almost all tenants not operating under Level 3 and Level 4 lockdowns, which caused a 7.1% decrease in net rental income. After returning to Level 1, Level 2, there was a consumer spending boom, which favoured tenants who had received rent relief, which offset the losses caused by Level 4 and Level 3 shutdowns. With this in mind, we recommend KPG review rent relief measures by a case-by-case process as opposed to an umbrella package. This reduces unnecessary excess rent relief losses to tenants who bounce back after lifting of lockdowns, which in turn will yield a healthier net and gross income, and which in turn also increases profitability. Moving on to our final recommendation, we talk about refinancing of debt. Currently, the OCR post-COVID is at an all-time low, and KPG also has outstanding debt issued earlier than 2019. This debt could be refinanced in line with current interest rates, which will lower KPG's interest costs and yield higher profits and eventually higher profitability ratios.
That was our presentation, and thank you very much for listening.